All right, there we go. We're fired up. We're ready to go. Hello, everybody. Hey, thanks. Thanks for being here, everyone. Right Way Options, Hit Run Candlesticks, BYOB trading. This is we've done this now for a month, I guess, where we're putting our members e-learning on every first and third Thursday starting at 11 Eastern time. So what it is I'm kicking it off, and then I believe it's Doug next with Right Way Options. Then it's John. I think it's that way. Maybe if Ed's here, he can confirm that. What we're going to try to do is sort of a theme. Maybe not maybe a topic is not the correct word, but theme. And today's theme is going to be moving averages. So each one of us will talk about moving averages, how we use them, but it's not going to be 3 hours of moving averages. It's like with me, it's not going to be, 50 minutes of moving average. Hit Run Candlesticks folks here, I doubt you're going to learn anything. A lot of repetition here. Anyone from Right Way Options or BYOB, you could. Please ask questions, okay? Please do so. I'll put the SPY up here, and I want to cover what moving averages I use to start with. That's number one. And I'm going to run through that fast, all right? So if anyone says, hey, wait, what's that? Please ask. The 200 period moving average is this red line right here. This dotted line is the dotted deuce. If you don't know what that is, let me know and I'll share exactly how to get to it. This line right here, which I don't always have it on a chart, is the 500 period moving average. And what I'll do a lot of times, it's actually a little dark right now. I'll dim it down because I don't want it to stand out. I just want it there. I can kind of see it. Here it is in, really dark if you want to see it. But it's sort of a background moving average for me. So that one. The next one is the 50 period moving average. The next one you see here, which is sort of dimmed out, which it's a background moving average, is the 34 EMA. This is right here. And it's kind of a background. And there are times I'll just take it off because I get, I don't like it sticking out, so I'll get rid of it. This line right here, this is the 25 simple. This is the 25 simple. And I keep it pretty much dimmed down. And what I've done with actually, maybe I should make these two brighter. What I'm doing with these is really more scanner work and trending work than anything. But we can talk about it in terms of trend. The moving averages that I use, I don't draw trend lines as a habit. I don't, I'm not going to sit here and look at this low and draw a trend line like that and say, hey, we've broken down. I let the moving averages draw my trends. I don't, and I'm not saying that's better than trend lines, drawing hard trend lines. I'm not saying that at all. I just like it better, honestly, because I'm lazy. Truly because I'm lazy. The second thing would be that for scanning purposes, I don't believe you can scan with trend lines. However, you can scan with moving averages. So I just don't use, straight line moving averages, static lines. And there's nothing wrong with that. I'm not poo-pooing them at all. I think they're great. You can use them in a combination. And sometimes I do draw trend lines. You guys have seen that. But by and large, my trend is all about the moving averages. And isn't isn't a moving average a trend line? That's all it is. It's just a trend line. It just moves is what it does. So let's, I'm going to dim these down. And another thing that I use these two moving averages for is there's something on the scanner, and I don't mean to make this about the scanner. It's not about the scanner today. But there's something that we look at rising for trend. Well, when price moves back, it'll bend the 34, the tip of the 34, and that's the way exponential moving averages are created. The power is more up front. So if you go back 34 days, if that's 34 days, it really starts showing price action here, where a simple moving average will show it more into here. So it's a little more back to middle, and the front is not necessarily affected. So something I've been doing lately is saying, okay, I want either or, because sometimes, you know, depending on the way the price action is, sometimes one will bend. And anyway, I'm just looking for an overall trend. That's all, overall trend. And then we'll look for a 3/8 trap, and we'll talk about that in a minute. Anyway, I better get over here and finish up what I was doing. Sorry, I got sidetracked. The dots, for those that don't know, the dots are just the 17 EMA. That's all it is. They are simply the 17 exponential moving average. There is nothing else. I've named it Trendicator, but that's just because you can name it whatever you want. That black line running through those dots, you can see it right here. It's a 17 exponential average of the last price. Nothing fancy. We've just figured out a very creative way to make it red and green, whether price is on top or the bottom. That's all. But I use that a lot, awful lot. And then the black line is the T line. That's just the 8 exponential moving average. That's it. That's it. Okay, now that I've run through those, let me grab some of these questions up here. Let's see, why the 25 and not the 20? You know, Thea, there's no rhyme or reason, okay? There is no logical rhyme or reason. You could use the 25. You know, and that's a great question. All I'm looking for is a trend. That's it. And I want the trend in the background. That's why these are dimmed down. I want the trend just working in that background. And then what I'm going to look for is the price action, you know, around that 17 EMA. That's where I like to buy. You could use the 20. You're just looking for an average trend. The way I do it, I'm going to miss out of trades. If you use the 20, you're going to miss out on trades. You can't catch them all. You can't find them all. So it's more of a decide what you want to do and do it. Just do it. And that's the way I look at it, okay? So I've just decided I want those. They're a little bit slower than the 20, and I don't want speed here. Something we have to go back to scanner, because I do a lot of scanning, okay? I do a lot of scanning for stocks. So that rising scan, I've always used the 17 rising 10 days. Well, what I've realized with that, and that's great, don't get me wrong, this is sweet. But what I've realized is that if I just take a slower moving average and get a trend, and you can see right there is the trend. Now if that's in the background and everything I look at is trending, now I can just concentrate on price action right here. And where the 10 rising, the 17 rising, you see right here, we lose the 17 now. It's not rising. We've dropped it. And that's what I don't want, because I use that 17 as a buy trigger an awful lot. So this chart would never come up on one of the rising 17 and 10 days. However, it will come up on one of those two moving averages because I have an OR set in there. So what could happen, and I mean, I'm not suggesting this is going to happen today, but we're in a bullish trend, a longer term bullish trend right now. The sellers have control of the shorter trend. Well, if price was to pop up, it would never come up on one of my scans if I'm using the 17 trending the last 10 days, because this right here ruined that. It just ruins it. It breaks it. However, the 25 and the 34 might pick it up, as long as they're not bent to the downside. Okay? You can do that with the 20. Just make that choice and just do that. Anyway, sorry that may have taken so long to answer that. I hope that was helpful. And great question. Thank you. Let's see. Dave is asking, can you show the setting? Sure. Dotted deuce setting is what this dotted line right here is. And the setting is, man, I'm losing my voice. It is the 200 period moving average. And the average type is front weighted opposed to simple or exponential. Okay, it's just front weighted. And it's the average of the low opposed to last price, which is most common. Last or closing price is the most common. I've got it set on low. And that's it. So it's a simple, it's front weighted. It is the 200 and the low. Okay. All righty. Let's see. Vern, can we talk weekly moving averages for longer-term positions? It seems that the 17 is too slow, representing too much risk to stop. I like the 8 EMA or the 10 simple for 8 to 10 week trades. Well, sure, Vern, you can turn it into a weekly trade. What's wrong with that? It's all about where you buy the chart. So the answer to your question is sure, we can talk about it, but I'm not going to change the moving averages. So what I will change maybe, or actually no, what I'm gonna look for. Well, let's go back to daily, okay? Let's go back to daily. There's only 95% of all my entries are going to be a 3/8 trap or a PBO less than the highest high in the past 5 days. PBO is just a pullback opportunity. This is really a pullback opportunity. Now, not one I'm going to get too excited about, but that's what that is. This right here is a pullback opportunity. There's a pullback opportunity. There's a pullback opportunity, a pullback opportunity. Okay? So for those that don't know what that is. So Vern, I can't speak for you, but this is what I'm going to do. Those 95% of all my entries are going to be this type of an entry. So let's take HUN, okay, for an example. See, we're trending and we're pulling back. That's a pullback opportunity. Now, let's go to your weekly chart. If you want it closer to the 17, then you have to find charts to the 17. if you mentioned the 10 period moving average, if you want it closer to the 10, then you scan to the 10. I does that make sense? Or maybe I'm not understanding the full question there. That could be too. So you're saying the 17 is too slow. You can put a faster one on there. You just have to decide what it is you want. And you said the 8 or the 10 simple. So it's the same chart. I'm going to look for the same thing. I'm still going to look for a 3/8 trap right here, or a pullback, PBO, below the highest high in the past 5 days is what I'm going to look for. And what that will give you is that rise and that pullback. And you can control through your scanning or your eyes. And your eyes, that's a scanning tool. How close you want them to those moving averages. Okay. If I didn't quite get that, let me know. All right. Is 200 forward of low? Yes, CJ. Thanks, Vern. All right. Now, I want to. So, it doesn't matter what time frame you're looking at. It doesn't matter what time frame at all you're looking at. You see, here's a chart trending up, and it's starting to work. Now, I could go in here and draw trend lines till I'm blue in the face if you want. I mean, you can go hog wild. But I'm lazy. I truly am lazy. And right here, I'm just using price. I'm using the candlesticks. I'm using the trendicator, and I can clearly see it's in a trend. Now, I don't need that 25 and 34. Again, those are mostly, those have nothing to do with the chart. They are background. Absolutely background is what they are. I just want that trending, and then from there, I'm going to look for the trade. 95% of the time, I'm going to trade when those dots are green, not red. And my theory, my logic behind this, and Thea, I said this to Thea, she said, well, why not the 20? You can use the 20, just do it if that's what you choose. It doesn't, charting is not, there's no magic in any one particular moving average. There's no magic at all. It's what you do with it. So if it's like a recipe, and it can be your secret grandmother's recipe, or it can be a recipe from anybody in the world out there. It's just an ingredient. You put that ingredient with this ingredient, with that ingredient, with that ingredient, and guess what? Here's what you get. You could get an apple pie. You could get mashed potatoes. It just depends what and I'm not, mashed potatoes are good. I'm not saying that mashed potatoes are bad. It's just, what is it you want to build, and you build it, and you consistently trade with that, okay? You consistently trade with that. So that's where this chart comes in, and these two moving averages. And I happen to think that these two moving averages are about the best moving averages anybody could have. Thank you very much, Jim. In fact, we're going to go use the cues here. You can clearly see first of all, the red dots signify that price is below the 17 exponential moving average. And I want to stop there for a second and maybe backtrack. Why the 17 EMA? Because I want to. That's why. Why not the 20? Because I don't want the 20. Like I said, this is my recipe. And my recipe builds, what it is that I want. Could I use the 20? Sure. But I don't want to use the 20. One of the big reasons I don't want to use a 20, everybody and their brother uses a 20. I'd like to be different. 17 is there. A lot of people use the 21 exponential moving average. The 20 is not better than the 21. The 21 is not better than the 17. The 17 is not better than the 20. You know, there's no one that's better. There's no one that's going to give you better information, because you're going to take that information and you're going to have to decide what's working. And depending on what moving average you're using in that area, the 20, the 17, the 21, you will pick up some stocks and some stocks you won't. You can't pick them all up, and you don't want to pick them all up. That's too many to look at. So just decide on what is it you want and build your trading career on that right there. I truly believe that. Okay, so it's why the 17? Because I want the 17. Simple. Why? That's why. So the red dots just means that price is above it. The green dots simply means that the price is above the green dots, or above the 17. The white line, this is the 8 exponential moving average, and this is the T line. So what I do with that, when the T line is above the green dots, we have trend. Now, this is not looking at any other moving averages, just these 2 moving averages. We have trend, and this is undeniable. This is undisputable. Those 2 moving average right there, using them, you have trend. Now, somebody may be using different moving averages, longer term, and say, well, and it could be, you actually are moving downtrend, down. Well, that's because you're looking at a bigger picture. I'm looking at this picture right there. So both people could be right. But this is undisputable, a bullish trend. Undisputable, a bullish trend. Undisputable, a bullish trend. So this just tells me when the market is bullish. That's all. Take the Qs. The Qs, Jim says, is turned green, and I'm going to go with that for now. But right in here, truthfully, if you look at the Qs, we never broke down to a full-blown bearish move because the T line didn't get below there. Now, I know that this trading right in here, if you were long and price moved down, you got your bottom whipped, is what you did. But this is just that guideline. This is just the guideline. If you want to make this a little more detailed, take it backwards to, say, an hourly chart. See where we are? So we are bullish until we're not. And while the Qs may be green, they are definitely still underwater right here. Because we haven't even crossed up, the 2 moving averages. Now, if you don't care about that, and if you're one of those traders that you're bottom picking, well, this does you no good. This doesn't excite you at all. If you see a green candle and you're bottom picking, you're rocking and rolling here. You're getting ready to get on it. I want to wait till that it turns up like this. I want to wait till this. And that's just my choice. That's what that is. I find that I'm a better trader doing that. So that's how I use those 2 moving averages. Any questions there? Let's see, where are we? The spices to make the recipe tastier. Yeah. And really, that's all I'm looking for. Let's look at some charts here. Whoops, didn't mean to do that. Let me change that over there. Put this cursor over here. And take a look at this. Just take DHR. The moving averages, the trend, is to bring the possible trade into the forefront. It's the price action and the placement of that price action that's going to get you an entry or an exit. So I might look at this. To me, DHR is 100% bullish right now. Right there. It's bullish. But I might come over to the chart and say, I might not like the chart. I might not like the price action. Something like that. Take EOG. Look at EOG. Let's go back over to here. See how that's been bullish? Well, we can go here. Bullish. You see how it's bearish? And now we've turned up. This pullback is opportunity when the buyers start stepping in. When do they step in? For me, it's best when the white line is over the green dots. Just like we're doing right here. Now, at that point, this is background. Now what I want to do is, do I like the price action? SLB is another one. Energy is kind of kicking it today. So you can see this is in a bullish trend, but if it makes you feel better to come look at this, you can look at it. And this is an hourly. Here's your daily. You can see that your daily never lost. Let me get rid of that. Never lost its bullishness. Not one time has the daily lost its bullishness. Price never closed below the dot there. However, if you come over here, you can see that hourly, we had that pullback, and now we're starting up again. Now, here's where I'll look at something like this here, and I can clearly see that we're just really moving sideways. And this is where a lot of danger happens. I'm not saying this chart's dangerous right now, but it's where a lot of danger happens. Where do you buy it? Do you buy it inside this box, or do you wait for a breakout? That's trader's choice. There is no right or wrong to that. There really is no right or wrong. It really is not. When it comes to the overall market, I think the older I get, the more years in trading, I've become, excuse me, I've become more of a don't fight the market. When the market is bearish, don't be long. Now, right now, say the Qs are turning green. So we're getting some bullish candles in there. And I can tell from the scanner that there's some bullishness popping in to the market. So there's this thirst, an absolute thirst to jump in there. But where's the trend? You've got price just making a bunch of mumbo jumbo stuff there. And so this is where I use this chart, and I mentioned this morning. I mentioned it, before. I think this is the best chart in the world, if you ask me, because I think any traders here that have been trading for any length of time, and you have to be successful. You can be trading for 80 years. If you haven't been successful, then you don't get to be in that special club of successful trading. Every successful trader knows that they make more money when the chart they are in or they buy is trending, and they make more money when the market is trending in the direction that they bought that chart. Every good successful trader knows this. They do not dispute this. Doesn't mean that that's all they trade, but they do not dispute this. So I've become very, very adamant about don't be long until the market is bullish. And the market is not turned over yet, right here on the hourly chart. Here's the daily chart, and price is currently underneath. Now, I'm still bullish on the overall market. However, I'm not bullish the last few days, and ever since that big bearish candle, I've been warning, we have a problem here. So I'm not ready to be bullish until this changes. And there's right there what I'm looking at. Right here, I want to be cautious. I want to be cautious, cautious, cautious. Trade when it's green. Trade when it's working. Okay, so I've just become more and more and more, this is the way to do it for me. Okay. All right. Unless there's some, questions out there, I just don't know what else to say about the moving averages. Moving averages you can scan for, you can't scan for trend lines. I know one thing. I don't use oversold and overbought. What I do is I use moving averages and the spread of them. The wider they are, the more dangerous things get. The narrower they are, the narrower they are, there is something about to happen. Could be up, could be down, but we determine that with price action. So take the 3/8 trap, for instance. All that is, see, do I even CME? This is 3/8 trap, sort of, kind of, anyway. So all we're taking is the 3 exponential moving average and trapping it between the 8. So 3 and the 8, we're just trapping price in there. And I'm doing that in a trend. So it's almost like it's a guaranteed PBO, pullback opportunity, but it's price action that tells us whether we're going to buy it or not. Something like that. Take this is a nice chart here. Take TSN right there. We're trapping price between the 2 moving averages. You can use any 2 moving averages you want, by the way. You can use any 2, it doesn't matter. There's nothing magic about the 3, there's nothing magic about the 8, nothing magic about the 17. It's just building a system around whatever it is you want. I mean, you could say something like, I want to know where price, and I'm going to use the T line here, where price has recently crossed over the 200, and then the price is trapped or below the T line or the 8 exponential, but above the 200. So I'm just using moving averages to control where I want price. Moving averages, just like trend lines, represent resistance or support. So when I look at this chart TSN, I see the 200 as not necessarily my first target, but it's the first target that my eyeball sees. And now from there, we can work with any targets in there. And this is where I would challenge somebody to, don't believe me, go prove it, go look at charts. Don't do it on a day that you're trading. Do it on a Saturday or Sunday where there's not that urge to buy something or, to look for a chart that's buying. Just focus on how many charts fail, like the dotted deuce, or find support on the dotted deuce. Fail the 200 or find support on the 200. Same with the 50, same with the Trendicator, same with the T-line, same with the 10 simple moving average maybe. Just you'll see that that moving averages will act equally supportive and as any kind of trend line. And if somebody finds a chart that runs a trend line perfectly, I can find you another chart that ran a moving average perfectly. It's like a 50-50 split. There's no one better than the other. It's what you choose to do. The thing about choosing it is you got to do it. You can't be hem-hawing about it. Make that decision and work that decision. Anything else? If I think of something else, I'll throw it out there. But if anyone has a question, please let me know. In the meantime, let's take a look at some of these, you know, how I might look at it. Here's SLB. Now, this is not a 3/8 trap because it's broken out. It'll come up on a 3/8 trap because it was in there. And then a lot of scans I use aren't necessarily a 3/8 trap, but they're also, or a combination of, below the highest high in the past 5 days. So I'm going to get rid of this because I never have the 3 on my chart. I think that just clogs up the whole situation. But I look at this and we're below the highest high in the 3 days, or past 5 days. That's opportunity to me. We're trending up. Everything's working. Let's take a look at this chart. We're bullish here. Look at that, this hourly here. Are we turning up? Yes. Yeah. Let's find another one. What was this? SLB. I'm going to pull them from right here. And we've got a lot of energies because that's really what's moving up right now in the trend. EOG. Look at that. Beautiful. Absolutely beautiful. Trending up. There's a nice PBO. We're below the highest high in the past 5 days. If we come over here, here's the daily chart, hourly chart. You can see how that we've been up. See how the hourly dipped by the dip in this case, or as we're coming out of the dip, rather. Out, there we are there. And if you look at the daily chart, we're still rocking. We're still rocking. Dick, you've got a question. A stock like TSN, with the spread over the 50-day concern, no, because I'm trading the price action, and as long as the price action is there, I'm good with that. And Dick, what's your? I know that you probably don't realize this, but over the years, this is what I've learned about questions that are asked like that, is you're trying to find the perfect trade. Now, you might not realize that. I realize that. And there's no such thing as a perfect trade. So you put all the probabilities in order. And I don't think that's a bad spread, by the way. You put all the probabilities in order, and then you follow price. So and when I say follow price, I'm talking about the price pattern, the candlestick patterns, and that's what I'm working with. This is setting up perfect to me. We've got a test of the dotted deuce that failed like it should. We have a PBO, and we're coming out of that PBO, and that's what I want. Beautiful trend working in here. Absolutely excellent. So, like I said, I know that you probably don't realize it, but that's what you're asking. You're trying to put everything in such a perfect perspective, and there's no such thing. Or you will spend all day looking at 3 charts the entire day. There just won't be, if you put too many if, ands, or buts in there, I guess. So anyway, I hope that was helpful. Thanks, Hector. Earnings. Okay. NUE. Let's go back to that question. When would you buy this one? How about right now? That's a good question. Okay. See, that's another thing. People ask, well, where do you buy this? Look, I'm not a 15-minute chart buyer. And here's a 15-minute chart that some people would say, heavens no, I'm not going to buy that. I'm going to wait for a pullback. Okay, if that's what you do, then do that. I'm not a 15-minute chart user. So on the daily chart, I'm trading the candlesticks just like you would on the 15-minute chart. To me, why would you not buy it right now? I mean, I can think of 1,000 reasons why not to buy it right now. Actually, one great big one, but there's a big reason not to buy it right now. But without that reason, why not buy it now? And I'm dead serious about that, Theo. Why not? I'm looking my first big target that comes out to my eyeballs is right here. So I'm looking for a trade that would do that right there. That's the trade for me right there. So if I bought it here, that's what I'm looking for. Now, if you want a sharper buy, a better buy, you can go fuss with the intraday charts, which is perfectly fine. I just don't use those, and I use the candlesticks. And right here, we have a bullish morning star. I'm willing to take that trade, but I'm not, because that one big problem today is that the market is not trending up. You've been known to do that. We all have. We all have. Okay. Let's see. Is there anything else moving? Let's look at ADM. Look at ADM here. ADM might be trying to set up. Here's the trend, overall trend, the hourly. See how the hourly up? We're in this pullback right now, and the hourly's trying to step up a little bit right through here. NCR, whoa, look at that hourly pop up. There's the daily. Here's the daily. Beautiful, beautiful trend. There's your pullback opportunity. Here, we're starting to move back up. So for those that are into continuation patterns, this without looking at price, just looking at this chart, this is a beautiful continuation pattern. Rest, continue. That's what we're looking at. Rest, continue. Now let's go look at price, because price is where we're going to make that final decision. Do we want to buy that chart? Well, do you? I mean, some people do. I look at this NCR, and I would suspect NCR is going to go to 29.25. Could happen today, or we could pull back a little bit before we get there. Here's the 500 period moving average. That's the next line, that big line that pops out to my eyeballs. And then from there, I can shrink it up and then go look at some price action over here for a target. Okay. Bob is asking, where's the stop on your TSN? Bob, can I ask you a question first? How much are you willing to risk in terms of percent? $5. There's your stop then. Right? Now I don't put percent stops. I buy close to those lines that are within that 5% for sure. But if 5% is your max, that's your stop. I don't care where you buy it. That's your. For those that know what the pucker limit what it is, then that's your pucker limit. So if you bought it right now, well, there you go. That's your max loss. But let me ask you this. If it pulled back here, would you like that chart? No. I don't think you would. I think you would, if you bought this chart and it moved all the way back to your stop, I think you would be extremely disappointed. Even though it maybe didn't hit your max loss. But you've got to ask yourself, why are you buying this chart? Maybe because it's trending up, maybe because it rallied up and pulled back right to the T-line. So what if it broke the T-line? Maybe that's the stop. There's sort of a running joke, sort of in hit run candlesticks, where if I'm in a chart like this, and I have a target here, and say we move up, and I'll start talking about this, and I'm still in it maybe, and I'm not selling it, and I want it to hit 57.90. Why do I want it to do that? And it's not because I'm going to make more money. It's because I want to be right. That's exactly what I want. All right. It's got nothing to do with making more money. I've already made money right through here. I want to be right. All right. So when you buy a chart, you want to be right based on what? For instance, this chart is trending. And we can follow, and I'll do this. There's the moving average, the 17 or the trend indicator, extend that trend. We can do the same thing with the T-line. I like to go just under the T-line a little bit, like that. So I just want to be right. When I buy this, if I buy this, then I don't really care if price pulls back, as long as it doesn't break that right or wrong line. I want to be right. So it can move sideways. I don't want it to move down. And it can move up. And I'm happy as can be. I just want to be right about the trade. So if you know where your stop was 5%, say down here, or mixing my questions now. Hang on. Somebody said, where would the stop be? Where would I buy it? I thought that's what I saw. Anyway, I don't want it to go down here because I would be wrong. It would have broke the 17. It would have broke the T line. Yesterday's low maybe might be that stop on there. I don't want to be that wrong, is what I don't want to be. I hope that was helpful. Let's see, Rick, you said the market is not pointing up to do. What time frame are you looking at? You can look at the daily. The market is not pointing up. The market is pointing down. Okay, GB. You can, yeah. To me, it's all about the daily chart. The daily is king for me. It's king, queen, it's everything is the daily. And it's pointing to the downside right now. Bob says, thought maybe use the 17. You can use the 17 if it's, not if it doesn't break anything. And I do the 17 a lot because I want to see that red green. If it stays green, I'm happy. If it says red, I'm wrong. This is my right wrong right here. That's my right and wrong. And it doesn't matter which time frame I'm looking at. I could be on a 3-bar chart. And if I'm bullish, now this price action stinks through here, but that chart is still bullish. And if you're bullish on this day right there, well, you're wrong. You're just flat wrong. Hey, Doug. About time for me to leave. Let's see. Earnings. Okay, thanks. Look at LOCK. I lost you. LOCL. There we are. LOCL. What am I looking at? I mean, I don't like the chart on that KK. I'm not gonna lie to you. I think the chart sucks. Okay, chart sucks, and the reason it does is you've got no volume. Okay, none, zip, nada. So just my opinion on that, but I'm not gonna. I mean, when I like a chart, I tell you I like it. When I don't, I don't. Period. Alrighty. Let's look at SCHW. That's still setting up, but I'm not going to buy it. There's a lot of good charts right now, but I'm not going to buy anything today. And the reason I'm not is because of this chart right here. We have not turned back up green. Now, am I going to miss some trades? I guarantee you. But there always will be a trade tomorrow. Always will be a trade tomorrow. Guaranteed. One more thing, and then I'm going to turn it over for any potty breaks here, okay? So we had this bearish engulf here. Now, I know from emails I've received and a couple PMs, I receive them all the time, every day, buy the dip. Well, some people do that, and that's cool. It might work for you, and if it works for you, keep doing it. But if it doesn't work for you, well, stop doing it. This bearish engulf means a lot. This failure means a lot. Right now, to me, this market's in trouble. And it will be in trouble until it's no longer in trouble. Well, where would no trouble be? Well, it's going to have to accomplish a couple things. We're going to have to move up over my trend line. This is my main trend line, the green and red dots. We're going to have to move over that. And to be really out of trouble, we're going to have to clear this high over here and, you know, move up the whole test sort of thing right through here. Now, there can be a lot of money be made here, but be cautious, be very cautious in here. We just may be in a little bit of trouble. A couple of ways it could move up is we've got a low. We could go to a higher high, and then it's going to have to test. And then it's going to have to break out of wherever that high is. We've got a lot to get through here right now. A lot of bad right now to get through. So be cautious, this market, okay? Follow the trend, whatever your trend may be. Follow the trend. All right, everybody, time for potty break. I want to thank everybody for being here. Doug will be up next. John will follow Doug. Thanks. Everyone take care. I'm going to sign off here. Doug will come on. I'll get this recording rendered and out. And, well, we'll see Hit Run folks back in the Hit Run room in a bit here. Take care. Thank you.